Hello, this is Vince from Sniper Day Trading, and what you're looking at is a monthly chart of the S&P 500 on top, the NASDAQ Composite in the middle, and the Dow Jones Industrials on the bottom. And each line is 1 month. We just completed the month of October, and now we've started a new month for the month of November. And you can see I'm going to go back a little ways here to show you about 20 plus years ago. You could see the peak here. All the speculative money jumped into the NASDAQ market, where in the Dow it tapered off and money went into the S&P 500. But you can see how the Dow outperformed here. All the speculative money, nobody was putting it back in on the NASDAQ. That money went back into the S&P and it went into the Dow Industrials, and that pushed it a couple thousand points higher than its previous high, where on the S&P you'll notice that the high was just exactly matched. That's why when we were approaching that market, I knew that this was actually the top. It hit it once, it pulled back, it hit again and pulled back, and then it started to form this cluster right in there, and it was just about ready to drop on this bar right here. You can see all three of those started to sell off and break the last pivot low. Trend lines are easy to draw. There you can see where the S&P broke support right underneath there. It was holding this line for several years, just like it stopped the downtrend of the sell-off exactly right here. So on this bar was your buy off of the low, and this bar was your sell off of the high. And it's the same with all the other indexes as well. The Dow did something very similar. Actually, the support broke down here, although there was higher support right up in here that broke. And the thing about it, where that takes us now, take it from the outside right here and extend that, and that puts us right smack dab in the area of where we're at, and that's why it's pretty much stalled. This is hitting resistance on the outside, just like all the other ones. Here's the S&P, the same thing, the outside bar, and that's why we've stopped. We're hitting resistance. A 50% retracement is just a slightly higher. Take it from the top, take it from the bottom, and you'll see we're just a smidgen away from a 50% retracement. Here it's showing 1123. On a daily chart it looks more accurately like 1120. That was why I had 1120 as my call, although we are up against some stiff resistance right here on the Dow and S&P. Now if I take this down to a weekly chart, you'll see on the NASDAQ market actually we are we did come back the full 50+%. This downtrend had broken somewhat earlier right over here, but if we take a retracement from the top on the NASDAQ market down to the bottom, we get right inside that middle of that range. There's resistance right here on the monthly chart. Actually, I didn't draw that. Maybe I can do it here. I'll extend this out. Go back from the peak high all the way down. We take it from the outside, which is right here, and rest that right on top. Notice that we're right at resistance. So the natural rhythm of this market is to pull back, and that's pretty much where we're probably going to go. Here's the weekly on the outside. We're right up against resistance, and sorry to say, it's probably going to pull back. In order for it to get over that, here we've already broken some support there, just a tad, and this was what I was hoping to hold on. We're in between these two, resistance overhead, support below. Support has broken, and you'll notice on the Dow it still has not broken. We are still right on it, see right there. So we're still here, but we've broken it on the NASDAQ pretty decisively. So that's your lesson here for today. Looks like lower prices over the next couple of months, but I'll show you some more tomorrow. Sniper.